All right, so I'm Tina Castro with Untitled Chapter, and I am standing in for my business partner today, Lisa Richter, who's usually part of these conversations. But I am going to be talking about impact investing to finance activities in the food system. So what is impact investing? You all have probably seen a variety of terms, and there are a lot of terms, and it can be very confusing. But I think if you begin to simplify, you kind of think of as social investing as kind of the umbrella term. And under that umbrella term, you've probably heard the acronyms SRI and ESG, which stand basically for socially responsible investing or environmental, social, and governance criteria. So criteria used to screen investments. Those are kind of umbrella terms that are sort of overarching and probably most commonly used. So underneath that umbrella term, you can think of sort of active ownership strategies, which includes things like screening investments. So either screening in investments that you feel good about because they're doing something that you want done, or screening out investments that you don't feel so good about. For example, screening tobacco out of your portfolio. There's also the idea of shareholder activism. So being an activist owner of a company, engaging with that company, and engaging them in a dialogue about what you want them to do, start doing or stop doing or continue doing. So those are kind of the activist ownership strategies. And then there's the idea of proactive investing, which is really where kind of what we talk about as impact investing falls. And that's the idea of making investments with a particular thesis in mind about what you want to accomplish, what you're trying to achieve, what agenda you're trying to push. So if we go a little bit deeper, and maybe just in very simple terms, the idea of an impact investment is simply the idea of making an investment that has both a social thesis, so a thesis about what good you're trying to accomplish, and also an investment thesis. So how are you expecting to get repaid? What is the source of either revenue that's going to support you repaying debt, or how is this investment that you're making going to grow in value so that when it's exited, it's worth more than it was when you invested in it? And that's essentially what makes an impact investment: social thesis and investment thesis. So impact investments, if you think of sort of the formal definition that you see out in the field today, is essentially the idea of making an investment in a company or organization or fund with the intentional purpose of achieving some kind of social benefit, environmental or social benefit, and also achieving a financial return. And that can be done across asset classes. So debt, fixed income, equity, alternative investments, things like venture capital, private equity. And it can either be done with a below market rate intended return, or it can be made with a market rate intended return. So if you're talking below market rate intended return, those are usually referred to as program-related investments, and that is actually legally defined in the tax code by the IRS. Mission-related investments is more of a term of art that's generally used to describe market rate investments that are made with the idea of also generating some kind of social return or benefit. So that is sort of the landscape on terminology and what impact investing is. But again, I think you can just think in very simple terms. It's an investment that's intended to do some social good and also have a financial return, and it can be any kind of financial return. So moving on to the food system. My picture here is not quite as sophisticated as the one that was previous. This is for the simplified food system. You got production, aggregation, distribution, and then you've got retail or institutional purchasing on the end there. And some of the examples that we're going to walk through are different points in that system. So here you've got, and I just realized that my numbering is out of order, so disregard the numbering. This is example number 1.
Countdown.
Right.
We can clean it up in the editing.
It's to create a little bit of excitement. So here you've got LA Prep, LA Kitchen, which was actually a deal financed by the Freshwater Fund, which I saw is listed in that resource guide there. So this was actually a sort of mixed-use commercial food production facility that was financed in Los Angeles. It was a $17 million transaction making use of new market tax credits. So very complicated financing structure. There were multiple investors involved in this particular deal, providing debt. There was a tax credit equity investor. There were multiple entities providing tax credit allocation. So a lot of different sources, but ultimately a really interesting model where there are, in this one facility, 50 sort of commercial kitchenettes for entrepreneurs who are just kind of leaving the stage where they can make stuff in their kitchen and sort of sell it, to needing to have something a little bit more sophisticated and official to be able to grow their businesses, but aren't yet ready for like their own big traditional commercial kitchen. And so this kind of solves that gap in the market. So I think, we've heard a lot about kind of locally sourcing of baked goods, or, this would be sort of a solution for folks in LA who have that kind of a business, who maybe want to start being able to sell to an institution, but can't do that out of their kitchen, and now have access to sort of this commercial kitchenette space that they can use. Also under the same roof is a social enterprise known as LA Kitchen, which was started by Robert Egger, founder of DC Central Kitchen, which some of you may be aware of, which is a social enterprise sourcing locally grown food or gleaning food from the local environment there, but using foster youth and formerly incarcerated adults as the workforce to make these healthy prepared meals that are then being distributed to seniors in the local region. And he's developed a partnership with various organizations there in the city of LA to do that. So it's like a very interesting model that helps support healthy local sourcing. This is a pretty large transaction and very complicated, primarily making use of debt. So the next one is a bit simpler, and this one is actually one that is in process right now. So I will say, sworn to secrecy in this stays in this room, other than the videotaping, apparently, which I was not aware of. So AgLink was an online aggregation distribution website for farm-to-school sales, and they had relationships with a variety of Central Valley farmers, were actually having great success, had over 90 buyers with several San Joaquin Valley school districts, and decided because of the success that they were having in this virtual model, wanted to move to a physical model. And so reached out to, actually this was sourced through through Emerging Markets, who is the food access organization for the Freshworks Fund, but is actually being financed by Northern California Community Loan Fund, if all goes well, because it's still in process, it's still in review. But it's essentially a $500,000 loan to help them acquire and redevelop a physical space for this aggregation distribution facility. But what is interesting here is that rather than going to the facility first, they built the demand, they built the business model and the revenue model, and then went to the physical facility. And I think that's important to know. So here, now, so those two were debt models. One pretty complicated with using new market tax credits, then a kind of a simpler model with just sort of a straight loan for real estate. This is kind of a pseudo, you could think of this as sort of pseudo equity. So this is a mobile food truck in Merced, and this was actually referred by one of the partners, who I don't think there's anybody here from Dignity Health, but
They're part of it.
they're part of it, they're not, okay. So this was referred over to the Freshworks Fund from Dignity Health. And so because it was a startup and because it wasn't sort of traditionally financeable now, but had the opportunity to become a revenue producing business, it was financed with grant dollars. So the fund has the ability to provide both debt and grants, but not grants just for a particular project, grants to projects that are showing the possibility of being kind of revenue producing and self-sustaining in the long run, which this model was. So they got a $30,000 grant, which allowed them to purchase the truck that you see and do the retrofitting and get the operations going. And now the hope is that as they continue to grow, because they are generating revenues, that they'll be able to use those revenues to obtain additional financing in the future. And this is a region where the idea of sort of a traditional grocery store doesn't really work. What's needed is more of sort of this distribution model, this this truck that can actually go to different sites, and this truck visits schools, it visits libraries, it visits healthcare facilities, so making the rounds in Merced. Food forward, so this is also, you could think of it as kind of a pseudo-equity investment, and then again, it was financed with a grant. But here, this is really a kind of a gleaning, foraging model, where the idea is this organization goes out and collects food which otherwise would go to waste. And while this model is not so much about getting to revenue positive, it's more about figuring out how to do this in the most efficient way possible, creating the most efficient aggregation model possible, and then figuring out if there's a way to find buyers for that food, payers for that food. And then this last example is a true equity example. So this was an investment made by Pacific Community Ventures. It was a $400,000 equity investment in a producer of hormone-free, naturally produced meats. They invested in the company very early on. The company grew, was ultimately sold to a private equity firm, and so the investment worked out well. There was a good return on the investment for Pacific Community Ventures, but now today you can find Niman Ranch meats in Whole Foods and Trader Joe's. They've become a pretty sustainable, financially sustainable operation. So those are a handful of examples of financing along the food system continuum, and I will leave it at that.